Good morning. Thank you all for being here. I'm going to go through a couple slides, kind of talking about how we got here and where we're going. And hopefully can answer enough of your questions that when we leave here today, everybody's kind of on the same trail and we kind of know where we're at. So let's get started. Several months ago, we were dealing with a couple of clubs doing their year-end filings. And they were bringing in a sizable amount of money, and they independently went and contacted a couple of CPAs to help them along as far as their end-of-year work goes. They got their paperwork back, and their accountants kind of presented them the paperwork, unsigned, and told them that, well, here is your end of year, but I cannot sign this due to the fact that there are some inconsistencies with the IRS tax code. So that was brought to their attention, which came to our attention. And so as we looked into this matter a little deeper, it was kind of like peeling back an onion. Where are we? What clubs are doing what? And how are we representing ourselves, be it the organization here, the association as a 501c4 organization, and the rules and regulations that affect a 501c7 when it comes to social clubs. So as we proceeded to get through the budgetary process, we were coming up on things related to financial advancements that 501c7 clubs were getting during budget season to enable their clubs to expand and do some things, and the clubs would then make agreements with the association to pay us back. And in the process of paying us back, they were doing some fundraising and advertising and various things like that, which in turn turned out to be conflicts with the IRS tax code. So enter the world of 501c7s and club revenues and tax status, and here's where we are today when it comes to the rules, regulations, and procedures that have been established for the association and all of our owner members and all of our chartered clubs, along with the policies in place approved and designed by the governing board. So if I may, let's just talk a little bit about a social club. Those are groups of people in place where they meet and generally formed around common interests, occupations, and activities. They're organized for pleasure, recreation, and non-profitable purposes. Generally, social clubs and membership organizations are supported by their dues, their annual fees, charges, and other funds paid by their members. Focus on the word members. Now those are club members and not members of the association, right? Individual club members specific to that social club. Tax exemption for social clubs operate properly only if the club's income is derived exclusively from club members. And so clubs should be taxed on all income derived from outside their membership, including investment income. Now, everything you're going to read here today, or I'm going to read off of these slides, are simply cut and pasted from existing policies, rules, procedures, and code. This is nothing that we created. These are as is. These are the rules of the game. And so, as a former sports official, this is what I kind of look for. So, organizations, 501c7s, in determining whether a club is operating for the pleasure and recreation of its members, the IRS looks at the sources of its revenue. Revenue, not expenses, gross receipt revenue, not net gross receipts. And we've kind of gotten off the train track a little bit in the previous years on how clubs were reporting their end-of-year numbers. I think they were focusing more on net as opposed to gross receipts. So generally, again, clubs' support should be for membership dues, fees, and assessments. And the tax-exempt status could be jeopardized if your gross receipts are from outside sources. So we have these rules, regulations, and procedures that are in place for all of our chartered clubs. And so out of these rules and regulations, right, non-recreation card holder guests may be invited only by individual card members. These clubs are generally not open to the general public to come in and utilize these facilities at their own will. So they're not there on an open public invitation. Special events and tournaments are allowed, but they require written requests to the rec centers on specialized forms. Clubs that do not advertise or shall not advertise for non-member participants in public media to avoid the appearance of a commercial operation or solicitation. So there are specific rules and policies in place on how the rec centers approve advertising, whether it's on softball outfield fences, whether it's naming rights on tennis centers, softball fields, pickleball courts, and those types of things. There are rules and regulations in place that have been in existence for a while that somehow, again, have not been adhered to. And that has caused a little bit of problem and concern. So all clubs should adhere to the commercial sponsorship and signage policies of the association. So clubs' advertising activities can be a precarious trap for the unwary club officers and jeopardize their compliance with the tax code. So advertising money that is derived into the club's coffers is considered outside revenue, right? And so that the IRS looks at not in favor of a real need of a social club. So the sale of advertising on non-traditional business activity, because it does not really further the pleasure or the recreational needs of the club members. You can play a softball game or a pickleball game or a tennis game without advertising. That's not really necessary to have that to provide your function. So I apologize. This is a very tough read. I should have put that in black ink. I apologize. But advertising is where the greatest potential for trouble lies. When it comes to the general rule and revenue derived from advertising is considered non-member income. 501c7s advertising their facilities are engaging in a non-exempt activity from the tax code, and organizations that exceed the 15% limit may lose their 501c7 tax exempt status. So moving on a little bit, we also have clubs that have non-member participation. Various types of dance groups, from country swing to square dancing, card playing, Kiva bridge, those types of things, all have invited basically outside members to join them for a fee to play in the house of our association's clubs. That over time has really morphed. At times, a lot of these clubs now have outside members that double or triple the amount of owner members participating in these clubs. And the revenue that's being generated by these outside sources is problematic when it comes to that 15% limit that the IRS is going to hold your club to when it comes to being a legally functioning social club. So in the rules and regulations, it states that the general manager may recommend to the governing board suitable sanctions and up to including revocation of the chartered club for any clubs that violate this. Chartered clubs shall not merge with a non-association entity. If a merger occurs, the club's charter is subject to revocation, and clubs are required to have their tax ID number and complete the proper forms, and revoking a club's charter could include violation of the federal, state, and government statutes. So we really need to pay attention to that. So a club that engages in business as by making its social and recreational facilities available to the general public, or by selling other products not organized and operated exclusively for pleasure, recreation, and other non-profitable purposes, is not considered exempt from a tax-exempt status. So, moving on to the world of arts and crafts, we have a wonderful program. We have 103 clubs here in Sun City West. 3 of those are 501c3s, and they have various rules that apply specifically to them. They can fundraise, they can do things, a lot of community benefit work and that type of thing. Those clubs are, I think, the auto restoration facility, the local radio station, and the library are 501c3 organizations. All of the other clubs, per se, have a 501c7 status and should operate as social clubs. And that was going on for a while. I've been in Arizona a long time. I can remember you had to drive miles from Phoenix to get to Sun City without seeing a home. That's changed. And so over the course of time, things have evolved. Back when Sun City West was being developed, and Del Webb had just completed Sun City, you know, they have operational clubs, bocce clubs, not pickleball, but they had lawn bowling and their bowling centers and craft clubs, metal shop, wood shop, women's club, men's club, and they're all operating as social clubs, doing what they're supposed to be doing. Over time, things evolved. People are people. They're ingenious, right? And they're very crafty. And so what has transpired over time, 1984, a credit card was invented. 1991, the internet showed up. And so those two mediums together provided a lot of business opportunity for people. So let's take advantage of that. It's great. I do it myself. I'm a woodworker, and I can sell things to my friends, family, and to anybody else in the wide, wide world of the web. If you go to a website and want to buy a nice cheese board, a wine carrier, and I'm not advertising for myself, I shouldn't say that, but don't do that. But anyway, what we've evolved from here, these craft clubs here, over the last 10 years, as tax exempt, right, social clubs, we've generated over $7 million in craft sales, non-taxable, right? That'll raise the flag, I think, in the eyes of the IRS. And so peeling back the onion from a cute little card club wanting to play bridge and having their accountant tell us that, you know, your revenue exceeds what's allowable in the world of the IRS as a 501c7 organization. When you peel back the onion and, well, who else is bringing in outside money that is jeopardizing their club's tax status? Well, 80% of the clubs, of the 100 clubs that we have here, are doing the right thing. They're absolutely doing wonderful work as 501c7s doing the thing. We've got a handful of clubs, primarily the crafting clubs and the outdoor sports clubs, be it pickleball, tennis, and softball, who do a lot of independent fundraising via the program that has been allowable through our governing board, and that is the paying back of a loan, per se, of getting improvements done to your venues. And that has caused a little bit of a problem in the world of the IRS. So the sale of products or services in the association facilities for personal monetary gain is prohibited. That is spelled out in policy, and that is spelled out in the rules and regulations adopted by the governing board. Nothing that I created, nothing that our staff has created. These have been in place for a long, long time. I can't tell you when the train came off the track, but we're here, hopefully, to kind of put the thing back on the track and do the right thing. So any club member who sells items with equipment made within a club will face suspension from the club. I don't know of that ever happening, but failure to comply with IRS or Arizona Department of Revenue requirements can result in severe penalties to both the club and the association. That's what I'm concerned with. I have a fiduciary responsibility to oversee your money. I don't want to see your money going to any kind of fines to the IRS. I'd rather not do that. So I'd like to get everybody back playing by the rules, and I think we'll be in a good spot. So clubs and individual members shall not have profit as a goal. These are hobby shops. These are for you to recreate in. And what has transpired over time to the $7 million tone has evolved into cottage industry. And we need to address that issue. Short-term goals, I'd like to see us get the trains back on the track. More meetings will take place with our governing board, committees, and groups like you all here today who have interest in crafts, who have interest in doing what you're currently doing, to see if we can move this thing forward. I can see consignment shops in the future, but those have to be done correctly. It can't be a 501c7 providing that kind of service. It needs to be individual craftspeople working and paying the appropriate tax involved if you are in a crafting business. But the philosophical program has to be come together with tax attorneys and our governing board, and do we really want to open up our clubs for commercial operation? And that is a philosophical question that needs to be addressed. So moving forward, the IRS has basically ruled that income received by clubs and members for non-recreational services should be characterized as non-member income for the purposes of gross receipt limitation. Any organization that exceeds those limits may lose their 501c7 status. So at the end of the year, clubs produce CR7 forms. This is an example, you're about to see an example of a newly kind of created one to kind of help in this process, we hope. But there was an amendment to the 501c7 tax requirements that basically say that organizations can receive up to 35% of their gross receipts, including investment income, from sources outside their membership without losing their exempt status. But within that 35%, no more than 15% of your gross receipts should come from the general public's use of the club's facilities or services that they provide. So what we're trying to accomplish here with their end of the year filings is to have the clubs track their revenues. Like the women's club, for instance, they charge an annual fee to join the women's club. If they have like a $10 a month birthday fee that they pay into, if they want to pay for lunches for people who have birthday on a particular month, that's all good. That's members of the club contributing to that club. That's all good. They can raise those types of funds and no questions asked. And like I said, 80% of the clubs are doing the right thing. But when you start bringing in outside sources, bringing in outside guests, or selling advertising, which is considered outside money, that needs to be classified and quantified as such. So we're hoping that this new form here, which will show your current year's income, but off to the right, you're going to see a little spreadsheet that'll basically separate what is member source money and what is non-member money. And as you get down to the total, you'll see, hopefully in green highlighted there, you're going to see that this particular example shows that 30% of this club's revenue was generated from non-member sources. Following the arrow back, where the IRS limits you to 15%, we've got a problem. And so this is what we're trying to accomplish here today, hopefully educating the clubs as to what social clubs really are, what your mission is, and how we can move this thing forward. So when it comes to making decisions that could affect a club's nonprofit status, it's critical to have a tax professional maybe review your operations. You can certainly talk with us. You can talk with any of our finance members. I don't know if Mr. Finelli's in the back of the room. Our CFO can help answer some of these questions, but a qualified accountant can really go a long way if you do have some technical questions regarding your clubs. I am not an attorney, and I don't want to give you any kind of legal advice and be held to that, but I'm just kind of here telling you that the IRS does have a code specific to 501c7 organizations that we hope to get everybody back on track and following, and then reunite with our policies and our procedures that are in place here today. That concludes my slideshow, and I'd be more than happy to answer any questions. And I think, to be fair, there is a microphone in the back. If I could please get you to utilize that, because I don't know if everybody will have an opportunity to hear you.
Okay.
Tim, is your mic live? Or could be
Is
live?
it on? No.
Yep.
Yes?
Thank you.
Is it on?
I think so.
Okay. I have a question. Our club receives donations of items, and then we have a stash sale and sell it to our members. Is there a limit on how much money we can receive from a stash sale?
You referenced that you're going to sell it to the club?
Yes.
To club members?
Just the club.
So that would be money from club members.
Okay.
Now, because someone's donating materials, there's on that, can you go back to the CR7?
I can. I thought I could.
Okay. So the left half the left half of this is the income side of page 1 of the CR7. The part on the right isn't technically part of the form yet, but I just built this to provide an example of what I generally see when I'm looking at the CR7s. So on the left side of this is representing all of the kind of your gross receipts is the left side. If someone hands you material, you can't really put that on here because it's not something you're depositing in the bank. It's just they gave you materials. And if you sell those materials to your club members, then that's from member sources. So you're fine there. And that revenue's probably, I think the first line is called sale of supplies.
Okay,
So in theory, that's what that could be. Or if you wanted to separate it, you could put it down on the bottom in one of those empty spots that you can just fill in. So you would be fine in that front.
is there a dollar limit that the club can receive per year?
Well, but all you're doing there is selling supplies to members. Now, there is a line on there that says, it's probably in the middle, Bill. Does it say contributions or, there's a line probably in the middle on the left side.
Contributions and gifts received.
Yeah, and then I think there's a parenthetical thing beside that says there's some limits on that. That part I don't know, but again, that's not a cash contribution.
No.
So I would say no. I'm not 100% sure, but I would have to say no because it's people just donating materials.
Okay,
So
that's
I think
great.
you're good there.
Okay, that helps.
Okay.
Thank you.
I represent Hillcrest Dance and Social Club. And each year, outside of a year like this last one, we have what's called our black and white ball. It's a dress-up outfit. It's real nice. It's catered by Sharko. And we have approximately 200 people present at that. The fee to cover our food is something like $30 or $35. That's $6 or $7 grand. How is that going to be handled as far as income?
Okay, so again on there's another line item right on there that says, and I can't read from this far, but there's a line item on there that says funds for parties and food.
You're right. Money is collected from parties, picnics, etc.
Yep. So the money that comes in to pay for that goes on that line, then your expenses would go on the other side of the ledger as an expense.
So is that revenue that we get from the people when we sell them tickets?
It's all considered gross receipts. Anything that you can deposit in your bank account is included in their definition of gross receipts.
So
the
if
answer to that would be yes.
If your tickets are sold to club members, right, Hillcrest Dance Club members, good. But if you're selling to people that live in Peoria, Glendale, Phoenix, elsewise, that needs to be decided and calculated into your non-member column. And basically, if you're over that 15%, that is an issue. The way Kiva Bridge, I believe, is you kind of have the same scenario that some of these card-playing groups have, where you're allowing outside guests to come in and participate in your program, be it dancing or whatever. Kiva Bridge is looking at disbanding their 501c7 group, because if they just limit the play to owner members or club members within Sun City West, their card function thing, it just doesn't work for them. They need to have that competition and that outside groupings coming in. So they're disbanding their 501c7 tax status and forming their own kind of a chartered club with an LLC, a different type of taxable scenario. And so then in that group will then rent the facilities from us, as opposed to having a complimentary room for them to play cards. It's just like renting a picnic ramada. If you want to have a celebration of life ceremony or a birthday party or something at one of our parks, you rent one of our ramadas, and at that point you can invite any and all. We don't really care where they come from. It's a private rental for you. We do that. We can rent out this facility here to any owner member who wants to have a function, and what they do with that function is really up to them. So the card playing group, similar to what I think Hillcrest Dance might be wanting to do, is to schedule that type of a program with us, where you basically rent the room from us and then you can continue doing what you're doing. But to continue to act like we're doing now under the tax exempt status scenario, problematic in the eyes of the IRS and us.
So as I think a little bit more about this, the answer to my question is obvious. Is revenue from guests. even if it goes out the door immediately for expenses for that evening, it's still revenue, so we can go ahead and have our black and white ball, but it'll have to be primarily for members only.
Or go the other route and drop the 501c7 and do a rental thing, yes, sir.
Sure, thank you.
Uh-huh. Yeah, the IRS is not really overly concerned with your expenses. You know, what your outlay is, it's really just their focus on where your money's coming from and who is it coming from.
All right, so let me add one more thing, as long as I gotta actually get up here because I can't read it. So, black and white ball, you're selling a ticket. That ticket is not necessarily just for the food component, it's to cover the event. So 4 here is registration/admission fees. And then there's an A and a B for regular events and tournaments or special events. So this is where the ticket money coming in would go. Down here, you've got monies collected for parties, picnics, etc. That would generally be more like what you had referenced earlier, the birthday club, or just taking money to fill up the snack shelves. That's gonna go down here. But if you're actually physically selling a ticket for a function that includes food, that's certainly gonna come up here. And what I had done over here is just basically say, okay, sale of supplies is typically going to be member. And this comes into that 15% thing. The form's not designed to help you calculate if you're in compliance with the IRS. The form's just designed to make sure that all your accounting works. But over here, as you look at this, there's a bunch of these line items that could be either. And so what we probably could do is add some of this math kind of outside to the right of the schedule, but like I put on here is for regular events and tournaments, this could be member and or non-member. So it's kind of it's on the club to be able to try to determine that. And from the work I've seen with the clubs, we're probably not tracking it like that today, because I can see, a lot of, okay, here's a deposit for all the tickets for this month, week, however often they make their deposits. And generally, they're not tracking whether it's club members or not. So that could be a change. If you're somebody that, like in this one, they're about this particular, and this wasn't an actual club, this is just me making up an example. With this example, they're double what they're supposed to have for non-member income. And so if your club is close to that, then this is kind of how I would suggest that you need to do a little different tracking to be able to see if you're in the right ballpark.
The question I have, I am speaking for our club specifically, but 3 performance-based clubs that use the theater for performances. I guess it's a two-edged question. The first is, the majority of our revenue for all 3 clubs comes from ticket sales, the majority of which are non-members of our respective clubs. Obviously, there are expenses, there are rights that we pay. For example, for the theater, we pay for script rights to do a show. The cost, and you said revenue is separated from the expenses. It's more the revenue side that you're concerned about. Is that an issue if it's ticket-based, even though majority of people attending those are non-members?
I believe so. I believe it's correct in that's mostly non-member income, which has to create a problem.
It could create a major problem for
I think so.
For those 3 clubs. Okay, the other question, I guess, then is, from our perspective, we purchase advertising to promote the shows that we're doing at the theater. Is that also an issue?
Well, but you're paying for advertising.
We are paying for it, correct?
Yeah, that's on the expense side of the
Expense
ledger.
side,
That's
so it's a
not part of the
non-issue.
math.
Okay, but the revenue issue from non-members is where our...
Right.
Yeah.
And I think looking at the function of the club, all clubs have different functions, right? Women's club's different than the wood shop than others. When looking at the theater, you may want to talk to a tax consultant and maybe consider dropping 501c7 social club and doing something, since you're doing community production and that type of thing, you may qualify as 501c3 and go that route and still remain tax exempt in that. But we wouldn't be, Department of Revenue probably help you as far as would you qualify?
Okay, thank you.
Nelly, the CFO. Bill or Tim, would converting it to a special event scenario, running it through Casey, negate it from running it through the club?
No,
Well,
I don't think you want to go there. I mean, that they're so individualized and they're doing what they do as an individual club and organization. I would keep it at that.
Good morning, Mr. Schwind. Thank you very much for getting everybody together and coordinating this. David Black from the tennis club. I just have a couple of questions. So the funds that we already have in the coffers, what do we do with those funds?
At this point, they belong to you. So we have, I think Pete was putting a presentation together, our CFO was putting a presentation together as far as this loan program that we kind of talked about. There are about 4 or 5 clubs out there that have agreements with the association as far as paying back some issues that have taken place over the years. The 501c3 auto restoration folks, different world, 501c3, but they have an outstanding 10-year agreement with us for a little over $500,000. And they're paying their annual dues, and they do their annual fundraising as they do with car raffles and auctions and that type of thing, and they're paying that back. Stained Glass Club as a 501c7 is doing the same thing. That your tennis group still has an outstanding balance of about 20K maybe. So we are, when it comes to those existing agreements that we have, we're going to work with those clubs and hopefully see that coming back our way. But I think moving forward down the road, I think that loan program or those issues need to go away. If a chartered club, if your tennis club needs improvements, that's what your $497 annual payment goes for. You are an owner member here, and you as president of the club can come forward with the proper request forms. And if you need improvements to the tennis courts or an expansion, something along those lines, through the committee line, through properties and the club committees and the governing board, that's what we're here for. We have a reserve fund, a very healthy reserve fund, $28 million in the bank and growing. So we're here to help you when it comes to, and all the clubs when it comes to need. So that's why we're here. We don't think it's right for you as a retiree to, for instance, pickleball came forward a few months ago and wanted to expand. And they came to the table and they said, hey, we'll help pay back $960,000. Okay, but it's a problem with the IRS. How you raising money to pay that back? Well, we'll advertise and do tournaments and no. So hold on. But then again, is it fair to ask retirees who want to play pickleball to spend the next 15 years of your life running around chasing money to pay us back? I don't want to see you do that, and you don't have to do that. You shouldn't be doing that. So enjoy where you live and enjoy the facilities that we can provide for you, and that's what we're trying to attempt here.
That sounds really good, but I used to work in the government, and so I know sometimes that they say a lot of good things, and it can be a bad thing. So I'm in the pickleball club, but I'm representing tennis right now. So pickleball on the one hand, and I'm not trying to argue with you, it's just I could see where they would say, yeah, but we want to get this done, and I'm not sure the governing board is going to approve that because, so anyhow, that's just, but retirees can run around and raise funds, and we have nothing else to do. So just a couple questions on the tennis club. The tennis club. So we have a 50-50 raffle in our club meetings. Is that a problem? It's only club members that are there. They're doing a 50-50 raffle to get a little extra funds. Would that be a problem?
Nope.
No, same thing. I mean, there's a raffle donations line on there as well. So you put your the revenues on one side, the outgoing on the other. And
Okay.
Same thing. If it's all just member stuff, nothing to worry about.
Now, to clarify, members, that's your roster. That's your tennis club member roster, not owner members, the 30,000 people that live here. Yeah.
Correct. Just our membership in the tennis club.
All good?
So now and I'm just trying to, and you may have, my hearing is not the best. You may have already addressed this issue, and if so, I apologize. So we have a Swing in the Spring tennis tournament that's open to the general public. If we use 100% of the proceeds, whatever we get, it's just, it goes out for expenses. for a prize or whatever, or to get the tennis balls, is that a conflict? Because we have that internal, that revenue coming in from outside sources, but we're also distributing 100% of that.
Okay, so again, the language that they use with respect to this tax exempt stuff is gross receipts without offset, which means you can't say, okay, I took in 100, but I put out 80, so I really got 20. That's what they're saying. They're specifically saying no. It's gross receipts, so it's money that you deposit, regardless of what checks you write.
So it's an aggregate, right? So all the money you collect from all of your tennis club members is a number. And if you collect additional money throughout the year for doing different things and whatnot, that number grows. And at the end of the year, you've got a 15% number target that you should look at as far as if you're going to allow people from Glendale, Phoenix, Peoria to come in and play tennis over a weekend, that fee that you charge them needs to be somewhat calced to see at the end of the year if you fall in and fits in with that 15% thing. Then you're good.
Okay, sounds good. And then the last question, I think, would be if we have a reciprocal agreement, say with Sun City Grand, for them to use our tennis facility and us to use theirs, or you have the Pinochle Club who has a similar agreement with other clubs and it's you're not making any money. Those things are okay, right? Okay, thank you, sir.
My question's simple compared to that situation. Dave Bourne, Computers West. One branch of our computer club repairs computers. You cannot bring your computer in and say, hey, can you fix this? You must be a member. We have many people who join to get their computers fixed, and then we never see them again. They paid $20 to join, they got their computer fixed, they did that rather than go to Best Buy and pay 80 or 100. So we took their money, they joined. Is that legitimate? They are a member, we fixed their computer, but we didn't see them again.
They are members, so
Yes.
that's member income. So that was well devised by someone.
Okay, we'll leave it that way. Second question. Computers become obsolete. We recently purchased 5 new iMac computers. We have 5 2013 computers that still work fine. Can we auction those to club members? How do we dispose of those? They are worth something. They are not worth much to us. That's why we bought new ones, because they become, in a sense, not obsolete, but certainly things move on in the electronic business rather rapidly. I imagine this would show up in wood shop or something where a piece of equipment becomes old and they want to replace the table saw or the bandsaw or something. How do you handle disposing of equipment that still works, but yet you want to make some income from it?
All right, so if you, in the first part of your sentence was if I sell the computers to a member.
Yeah.
That's the exact same scenario we just talked about. It's a club member, so it's not going to create an issue for you with the 15 and 30% thing, because it's club member money.
Okay.
So you're good to go there.
We can auction it or whatever as long as it's to a club member only.
Well, you can. I mean, the outside funds are permissible, but you got to keep it to that 15% of your gross receipts. So there's some leeway there. So it doesn't 100% have to be from members. But again, if it's 85-15, so it's the vast majority needs to come from members.
Okay, thank you.
The link is the social club, and backed by definition of social club.
Okay,
If you're
thank
doing
you.
social club function, you're good. If you start getting into the business world, they would like to tax you.
My name is John Hobold. I'm the secretary of the Country Western Dance Club, and I have a couple questions. First of all, I want to thank Bill Schwind for an excellent presentation, and I also want to thank Tim D'Angelo for his color commentary and good support of that. So thank you. Question is, will this presentation be available to us on the web so that we could show them to the other members of our boards?
Yes. We have one more at noon today, and then shortly thereafter, Katie can have that posted on our webpage.
Great. And then the form, I understand, is in progress. Tim, do you have a time when that would be available to the clubs? 2021 is obviously going to be a very unusual year for many of us in terms of reporting based on activity curtailment and so forth, but it's never too soon to start planning and see where we really stand on things.
Okay. Yes, I mean, just making this quick adjustment, just as kind of an example for these meetings, it doesn't take a lot of time. But I don't know what it looks like in a production mode, because obviously here you're missing half of that front page, which is the expense side. So I don't know if we need to add it to a second tab, but I will. It's the middle of May.
By end of summer?
Yeah. And again, having the form, because you guys aren't generally going to touch this form till January, February anyway, to start getting it loaded up. The key point is, or the key takeaway, is to start thinking about when I'm making these deposits or when I'm collecting money, do I have a way to track, member versus non-member? That's kind of the key here. And so we'll certainly get something like this added to.
Well, it'll be in the presentation, I guess.
Yes. Yeah, I mean,
It'll be in
just
the
for visual
presentation,
here,
so
but as far as
we
actually
have it there.
making something that you're actually going to fill out and work, for purposes of submission, I don't care. I don't want to add a whole bunch of more line items for member, non-member, member, non-member, because there's a lot of clubs that are. Again, we got one form that 103 treasurers need to deal with. And the level of complexity in these clubs goes from very, very not complex to very complex. So I got trying to create one form that doesn't frustrate the club who just has member dues only. And now I've got 4 pages and 800 line items to go through to account for my dues and the fact that I bought cards and cookies. So I'm working through that, but yes, we'll get something out for you.
In the meantime, I guess we'll have the presentation.
Yeah.
I'm thinking our club goes dark in the summer
Okay.
for many events, but we have October, November, and December, and knowing this is going to be reporting, I'd like to see how we come out. I'm sure our board will want to.
Fair enough.
Know that ahead of time. And then a follow-up on a question that actually came up yesterday morning, Bill. It would be very helpful to our club and maybe others if the rec center could possibly come up with a small short list of tax accountants that would be familiar with nonprofits and that maybe would even know about a little more walking knowledge about Sun City West and how we operate, as opposed to us all going out and trying to find a thing. It would be a good resource if you could provide that. I think it would be helpful to some of us.
Thank you, John.
And then I hope my question is not misinterpreted, but is it a requirement that a club be a nonprofit 501c7 in order to have a charter?
As we sit here today, I do not believe that is true. But Pete, can you shake your head one way or the other?
And one final question, you just asked for I'd like you to clarify. I wasn't able to completely understand your previous answer on the reciprocity agreements. That the tennis club asks about.
Recips?
We also have a reciprocal agreement with a dance club, and
Right.
Is that member revenue or is that guest revenue?
Any revenue that the club is reporting to their bank are considered gross receipts. If you're here or going there, if any money's coming into the organization, your organization.
Well, what I was thinking is we have Sun City residents that belong to the dance club in Sun City, they come to our dance. They pay a fee to come in. Is that member revenue for us, or is that guest revenue?
I would say guest revenue.
Thank you.
So I had a question. You said that the IRS would be looking to tax you. If these clubs kept track of revenue and expenses, can they file an unrelated business income tax return and pay the tax?
Yeah, the 990T or the 99T is the unrelated business tax stuff, and yes is the answer to that question.
Okay, all things tennis again. Just kidding. The signs that we have in Memos Tennis Courts is what we named it, and they sponsored us. So, is there a timeline for when we should be getting those things purged or taken down?
We are honoring any existing contracts. We currently have a 25-year agreement, I believe, with pickleball on a naming rights scenario that's coming due in a couple of years. But after that point, all basically as per policy, all contracts are limited to, as far as naming rights and advertising, to a 3-year period approved by the governing board.
Awesome. Thank you, sir. And then the last question I would have, I hope, again, is the date of when this is going to start for compliance. And I think you mentioned, is it Tim, that we're looking at January of 2022 for, because we're in almost June, and we don't know all those revenue incomes coming from members, non-members, paring it down. So are we going to start these forms and everything like in January?
Well, the form itself isn't going to change. There'll just be an extra little part added on for you to kind of work on breaking out your member versus non-member. Again, that's not the intent of the form is not to make sure you're compliant with the IRS. The intent of the form is to make sure that you're doing accounting within the club.
Okay. So we start doing that immediately, but I'm just
yes.
trying to go retroactive. I don't know how we do that.
I don't know how to, I don't have a good suggestion for that.
Yeah, I don't know about the retro, but moving forward, I think you just want to, again, play by the rules.
All right. Thank you, sir.
Good morning.
Hello.
Dave Rigg with the softball club. One comment and a question on the 50-50 raffle. We will have a raffle, and sometimes it's down at the ball field. And so when people are buying the tickets, we don't know if they're members or they're non-members. So I hate to get to the situation where we got to ask people, are you a member of the club or not? And it's not an awful lot of money, but in one event we had was over $2,000. And so when you go to your percentage of outside income and everything, that can be a concern. The question I got is, occasionally we'll have members that have played ball, and then it's been a few years that they haven't played and they've stopped their membership. But when they pass away, we will get notified from one of their family members that we have a contribution from their estate. So at that point, is that they're not members when they're dead, and how do we have to report that then for our purposes here?
As far as contributions like that, memorializations and donations and whatnot, we have a guideline policy that's been enacted by our governing board on how we deal with that. And so normally, like the softball property, the softball fields are 501c4 rec center property. So if that were to come to be and someone was to bequeath you with some kind of an endowment property or whatnot, we would coordinate with you to make sure that didn't land on your club's responsibilities, but via our association, since it's our property.
Okay. Thank you.
Yes, sir.
Say, Bill, you might want to
I
help
was
me
going to say,
clarify.
you asked a question, I'm going on.
But one of you guys brought up the record keeping as between member and non-member, but I could have sworn one of your earlier presentations that the IRS perspective is if you can't prove that it's member, it defaults to
Outside.
non-member. So I would encourage you to be very, very, very diligent on your tracking.
Paul Van Roy. I'm with the Square Dance Club. I think a big question for us here is, can we drop our nonprofit status and remain a chartered club? It was brought up a little bit earlier, but I don't think you seem to have an answer for that.
That is still kind of in the legal court. We're dealing with Kiva Bridge kind of the same way, where they are getting away from the 501c7. And I think the way it sits right now is that they are, for legal ramifications, they're dropping their chartered club and just going with an independent LLC. And that is headed up by a board of officers, kind of like president, vice president, secretary, treasurer. But those members of that particular board are association members. Those folks live here. Mm-hmm. And then as an owner member with your dues are in good order and that type of thing, they come in and they work with our scheduling team and they book the card playing room for a Thursday from 4 to 8 or whatever, pay the appropriate rent, and go along those ways. So I think that may be the direction of some of the dance groups that we're dealing with as far as moving forward. So again, I don't have an attorney in the room to particularly answer that one, but we're still trying to sweep up the mess.
A problem with that is that if we drop our charter club status, we no longer have access to facilities the way we do now.
That's correct. There's a priority list when it comes to
big question.
who has what. Correct.
Okay, and,
Right.
and that you're working on an answer to that?
Yes, sir.
Okay, thank you very much.
You're allowed to rent, but you just drop down the priority list to like level 5. So.
Hi, I'm Aletha Delamo, Interim Vice President of the Stardust Theater Council, which encompasses all performing groups there. This is all going to take some time for all the clubs to decide what they want to do. When it comes to the performances in the theater, we have an October performance and a December performance this year. The tickets are sold by the rec center. We have no idea what revenue is from what member or non-member. So the timing of this is going to be something that we're going to have to get working on right away and decide what to do. And I know we're going to need your help because most of us don't have a clue.
Well, I'm part of that team.
Okay.
So we will work together. Again, we've been in consultation with our attorney, independent tax attorney and auditors, and our own staff, trying to, we're herding the cats as best we can, and we will get the information out as frequently and often as we can. And the clubs in question, like yourself, we will definitely have some sit downs and make sure everything is moving forward legitimately. And I don't see all that much changing, really.
In the interim, is it possible that the ticket sales can be categorized member, non-member?
Sure.
By asking whoever is selling buying the tickets?
I say sure, but Katie's going to yell at me.
That's it. Casey's going to yell, yeah.
Yeah.
Well, and, oh.
Okay.
Okay. Unless the IT can change the system, or perhaps we have a different amount for members, a different amount for non-members.
Yeah.
I don't know if that's legit either.
Right. And that's the exact purpose of these meetings, because we need to hear from you. Because like I said, we got 100 different clubs out there doing 100 different things.
Pam Vermeer, I'm the treasurer of the Pickleball Club. I have a couple questions. We do the advertising with banners, but a number of our banners, I can't say the percentage, but a higher percentage is banners who are actually club members. So is that two different things, that it's a club member, banner signage, advertising, instead of someone from the outside of the community?
Kind of so, and I think that doesn't so much fall under the kind of in my mind, not per se the revenue thing so much, but more so just on overall on our advertising policy, what we're trying to do there. The policy talks about advertising when it comes to sports fields, tennis courts, and those types of things, fence signs. Those are somewhat limited. Particularly as far as the policy is written, and we just need to sit down and go over the policy and kind of explain that. But when it comes to tournaments or something like that, the policy as written limits you to a 6-week program so that we don't have banners flapping around, you know, on a, you know, wind damaged and that type of thing on a year-round basis and having to run around and maintain that stuff. So there's sponsorship and there are advertising policies in place that we just need to sit down and read through.
So if I hear you correctly, having a sponsorship is different than an advertising.
Yes, ma'am. In the world of the black and white policies
Of the
that
black
exist.
and white.
Yeah.
Okay, all
And I
right.
can-
Because
I
the
can get
majority
those-
of ours, I think, are sponsorships.
And I can get those copies of those policies to you and we can sit down and chat.
Okay, I appreciate that. I've got a question. Someone from another communities club had called me and we were discussing this because Sun City West is not the only community that's dealing with this tax issue. But one thing I was asked if, and this is kind of totally off, Pickleball Club, are we covered by the umbrella insurance of the association? Or he asked me if our club has to have our own insurance policy covering our courts for anything. I have never seen, I don't have anything in our records that we've ever paid for an insurance. So are we under the association umbrella for insurance?
Insurance boys right next to you.
Okay.
Yeah, it's all of our properties, injury,
That's what
yeah,
I thought. But
correct.
he asked me that because they're required by their club to cover their own. So I just wanted to make sure. Thank you.
Yeah.
Anything else? I believe this is recorded, so I think you can find us on YouTube. This presentation will be posted as soon as the noon meeting concludes. If you have any questions, we can find us at our web pages or give us a phone call or stop by the office and chat if you have any other questions. Thank you very much for attending.